Hi guys, it's Stock Curry. As you know, I took the day off yesterday, so now I've got 2 days worth of stock picks to give you. I've got about 9 hours of YouTube videos we're going to try to cram into about 20 minutes. So let's get into it. For those of you who are new to this channel, my name is Stock Curry. I used to be an analyst for Merrill Lynch and Morgan Stanley, and now I analyze stock picks from the top 15 YouTubers. I then combine all of my analysis into a daily video that I post right here on this channel. I spend hours every day watching YouTube videos so that you don't have to. All you have to do is watch this one video each day and you will get every single stock pick from the top 15 YouTubers. All I ask in return is that you hit that like button and subscribe to get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. Alright, before we get into today's video, I just want to remind everyone that I am not a financial advisor and none of the YouTubers I follow are financial advisors either. This video is strictly for entertainment purposes only. Let's get into today's stock picks. First up is AAPL, Apple. Larry Jones is dollar cost averaging into Apple, buying a little bit more every week. He said that when Apple finally releases their EV, AAPL is going to take off. Even if Apple never releases an EV though, Larry Jones says AAPL will still go up 30% over the next 5 years. Next up is ABNB, Airbnb. StockMo says not to look at ABNB according to today's revenues. Look at Airbnb for their future growth. This is a long-term hold for StockMo, and he thinks ABNB will continue to go up. Next up is AMC. This is AMC Movie Theaters. This is a short squeeze play. The stock went up to $3 today. Next, it should go to $4. And after that, it should skyrocket as the short squeeze takes place. Smart Trader warned that this is a very short play and to set a trailing stop loss so that you can get out as soon as it starts to go back down. Smart Trader also said to add this to your watch list so that after it sells back off after the short squeeze, this could be a good recovery play in the future as lockdowns start to lift. Next up is BAC, Bank of America. Chris Sain reiterated that financial stocks are a good buy right now. Chris Sain warned against putting too much money in the EV sector because eventually it will crash. Next up is BUSXF. This is Grand West Transportation. This is an EV bus manufacturer in Canada. Informed Trades mentioned this company yesterday. He would prefer to buy BUSXF at or below $2 and said this is a very risky stock to buy. Next up is CCIV, Churchill Capital. Churchill Capital is a SPAC, and they are rumored to be merging with Lucid Motors. Jack Spencer looked at the technicals on CCIV today. He found support at $16.63 and at $18.03. So long as the price stays above $16.63, we are fine. Jack Spencer does expect continued and increased volatility throughout this week. Given the volatility, I do not recommend putting a trailing stop loss on CCIV because you'll get stopped out on a normal daily volatility. Instead, given the technicals, I would recommend putting a stop loss at or slightly below $16. That said, StockMo is a huge fan of Lucid Motors and says that because CCIV jumped 80% on nothing but a rumor, we can't even imagine how high CCIV is going to go once the merger is confirmed. If negotiations fall through, StockMo plans to take the loss and keep his CCIV shares, because he thinks that if the deal with CCIV falls through, they'll try to merge with another company, which will cause the shares to go back up. But if the merger is confirmed, StockMo plans to buy a lot more stock. He just does not want to buy too much right now because he doesn't want to take an 80% hit if the merger does not go through. The traveling trader also mentioned the stock for the first time yesterday and said he feels like the CCIV Lucid Motors merger is inevitable and could possibly be announced as early as this week. Also, in case you didn't know, CCIV does have options. So you might want to consider buying a leap call for a larger profit potential or possibly a put to protect your investment in case the CCIV merger falls through. Larry Jones also mentioned CCIV today for the first time. He said this is too risky for him, and he said do not buy CCIV if you already have a lot of other SPACs and EVs in your portfolio. Larry Jones did say the same thing as Stock Mo, though, that if the CCIV Lucid Motors merger is confirmed, he will be buying CCIV. Jack Spencer also said today that there are a lot of fake images and rumors going around, and not to believe everything you see on Twitter and YouTube. What we do know for a fact is that the SPCX ETF has CCIV as their largest holding. And if we go off the premise that institutional investors know more than we do, so we should follow what institutional investors are doing, then that is a really good sign. Next up is CRNT. This is Ceragon, and they're an Israeli 5G networking company. They are the second largest holding in ARK Invest's IZRL fund. Tech Conversations let us know about CRNT yesterday, and both Dead Inside and My Financial Friend mentioned it today. It just received a major analyst upgrade and increased price target after the company said they are getting an increase in orders and expect a rebound in India. The price is also going up because ARK Invest continues to buy it. I should also mention that there are no red flags financially, so if revenues can continue to grow, we could see the stock's price continue to go up. Another catalyst is that Huawei has been banned in multiple countries, and Ceragon hopes to pick up that market share. Next up is DARE. This is DARE Bioscience. They are a women's reproductive health pharmaceutical company. 3 analysts are covering DARE, all 3 rated a buy with price targets ranging from $5 to $9. They have a drug in phase 2 trials right now, so it will be a while before they can get FDA approval. Other than Vanguard, nobody is really buying this stock yet. If you do decide to buy this company, plan to hold it for at least 2 years. It will take at least that long for DARE to get FDA approval. Next up is DBX, Dropbox. Chris Sain wants to buy DBX between $18 and $20, but says it looks like it has strong support at around $22, so it might not get down there. I personally have a buy-under price of $22 with an ideal buy-in price of $20. Next up is DKNG, DraftKings. This is an online sports betting company. Zip Trader says DKNG has 2 catalysts this week. One is sports betting launching in Michigan. The other is New York taking bids for mobile sports betting operators. Ken and Gray says today's drop is a great opportunity to buy DKNG. I do have a buy-under price on DKNG of $52 with an ideal buy-in price of $51. So I agree that now is the time to buy. Price targets range from $63 to $100. If DKNG reaches $100, you would nearly double your investment. Next up is ENBI. This is Enthone Biomedical. They are a pharmaceutical company, and they are developing a DMT addiction recovery drug. My Financial Friend covered the stock yesterday, but it was a paid promotion, and so I didn't want to include it. But since Jack Spencer also covered it, I will briefly talk about it. To be specific, DMT is a psychedelic drug. This is kind of a new field here in the United States, although it is more widely used in Europe. The market is expected to grow by 16% over the next 7 years, so I'm not very bullish on this stock. And I think the only reason it was up today is because My Financial Friend and Jack Spencer talked about it. That said, if you want more information on ENBI, I do encourage you to watch My Financial Friend's in-depth video on this stock. Next up is ENVB. This is an MMJ stock and also a Bitcoin stock, but mostly MMJ. They recently did a direct offering at $4.50, but the stock is currently 10% below that. Now, it did hit $15 a few days ago, so this has the potential to be a short squeeze once again and go up a ton. What is the catalyst? Smart Trader says if Biden legalizes MMJ, this stock will skyrocket. Next up is FuelCell, FCEL. Chris Sain reminded everyone that FCEL was close to a buy zone. We have a buy-under price of $16 with an ideal buy-in price of $15. Chris Sain did stress that it's important to be patient and wait for our stocks to drop down below the buy-under price before buying. If you miss out, that's okay. Don't chase. Next up is Gevo. This is a renewable energy company. Mcash and Ken and Grace pumped the stock yesterday, and for good reason. Gevo's co-founder was named to President Biden's Council of Advisors on Science and Technology. Honestly, I can't think of anything more bullish than a president committed to investing in renewable energy and not one, but 2 major shareholders on the President's Advisory Council. I agree with Mcash. This could be a great long-term hold and an incredible opportunity for significant gains. MCash put a crazy, quote-unquote, most conservative $50 year-end price target on Gevo. Now, financially, their revenues tanked last year, and they almost ran out of money. They had to do a stock offering last July just to stay in business, and their stock price dropped significantly to match the issues that they were having financially. But if you look at the monthly chart, you'll see that before President Trump took office, they were a much larger company with more revenues and stronger financials. So I think that with Biden as president and with 2 large shareholders on Biden's advisory council, we could see significant gains on Gevo. MCash might be right. This could be a once-in-a-lifetime opportunity. Ken and Grace also showed us that institutional investors are loading up on Gevo. All analysts covering the stock rated a buy, although it should be noted that that was back when the stock was $6 a share. I will also tell you that I bought this stock today at a little under $11 a share. Next up is GNOG. This is Golden Nugget Online Gaming. Chris Sane reminded us that this is at our buy zone. We have a buy-under price of $21 with an ideal buy-in price of $20. Chris Sane did lower his price target from $65 down to $30 because of its slow growth, but that's still a pretty good upside potential. Next up is INUV. This is Inuvo. They're an AI-driven marketing company. They have better technology than Snowflake. Before I talk about INUV, let me just say that if there is one YouTuber you should follow besides me, it's MCash. Almost every single stock he mentions jumps significantly the day after he mentions it. And since I do recaps, I can't get the morning picks to you guys until after the market opens, so you're missing out on a lot of opportunities if you only watch my videos. I do hope that one day I can do this full time and I can upload 2 videos each day, with one of them being in the morning before the market opens. But for now, make sure you follow MCash in addition to myself so that you can take advantage of his morning stock picks. That said, MCash put a price target on INUV of $3.50, which still represents a 141% upside from today's closing price. As with any penny stock though, this is a very risky investment. Next up is IPv. This is a SPAC and they are merging with Ava, which is a LiDAR company for EVs, ships, and other autonomous vehicles. This company manufactures the only LiDAR that can measure not only distance but also velocity. The financials aren't available yet, so I can't look at those. But with any new industry, we're more interested in the industry and the possible revenue growth. The fact that this company can measure velocity in addition to distance could greatly improve autonomous driving. They have good revenue growth projections, but keep in mind that there are many other LiDAR companies on the market, and if another company is able to add velocity measurements to their LiDAR, that could significantly impact Ava's growth projections. Next up is Li Auto. This is a Chinese EV company. Jefferies just upgraded Li today and put a price target on it of $44.50. That is significant because Jefferies is very conservative with their prices. Jefferies said that between NIO, Li, and XPEV, that Li has the highest potential for growth. Next up is LMND. This is Lemonade, and they're a tech company that is revolutionizing the way people buy insurance. When I first looked at this company last month, it was trading at around $100 a share. Since then, it has run up to over $180 a share, which caused short sellers to pounce, bringing the stock price down. Zip Trader thinks this will continue to go down in the short term, but once it bottoms out, this would be a good long-term hold. I'm putting a buy-under price in LMND of $130 with an ideal buy-in price of $110. Obviously, once the stock bottoms out and starts to rebound, short sellers will need to close their positions, which will cause the stock to go back up. That's why I'm also putting a price target at LMND of $180. Next up is NDRA. This is Indra Life Sciences. They manufacture a new thermoacoustic enhanced ultrasound called TAEUS. It is similar to an MRI, but at 50 times lower cost. This company has a history of large price movements in short periods of time, which is why Jack Spencer likes them for a swing trade. They hope to have FDA approval this year. If they can do that, This could be a $5 stock. As with pharmaceutical stocks, this is a gamble that they will receive FDA approval. Just keep in mind that many FDA approvals have been delayed due to the pandemic. Next up is NIO, N-I-O. NIO is a Chinese EV manufacturer. Chris Sainz reminded everyone that NIO is close to a buy range. We have a buy under price of $55, although Ken and Grace said now is a good time to buy. Larry Jones said he expects NIO to double this year, and he is dollar cost averaging into it. He continues to buy at current prices. StockMo said he expects Q1 earnings to be low, but Q2 earnings to beat as the lockdowns in China are lifted. Next up is NNDM, Nano Dimension. This is a 3D computer chip printer manufacturer. Richard Allen gave an update today. Over the weekend, he said the stock could go up due to the interview that aired on Bloomberg International, and sure enough, NNDM was up 5% today. Richard Allen also said he thinks the NNDM share price could increase by 30 to 40 times where it is now over the next 5 years. ZipTrader reiterated his 6-month price target of $25, which still means NNDM would more than double over the next 6 months. ZipTrader also explained that while NNDM does make money off of their printer, the real revenue is in their ink, which is a recurring revenue model. And that's why ZipTrader thinks NNDM will more than double in price over the next 6 months. Next up is PENN. This is Penn National Gaming. They are an online and brick-and-mortar casino operator. ZipTrader likes PENN as well as DKNG for their online sports betting potential growth. The benefit of Penn is that they have free marketing due to their partnership with Barstool Sports. The downside to Penn is that they also operate brick-and-mortar casinos, which are taking a beating right now due to the pandemic. Next up is PLTR. This is Palantir. The stock has been consolidating for over a month now. Informed Trades says this might be a good swing trade as it looks to be moving up or down in the short term. Short term, we have a lockup period expiring soon, so expect downward pressure in the short term. In the long term, though, this stock could be a good growth stock. Jack Spencer says to get this on your watch list and look for a major pullback to get in. Richard Allen mentioned PLTR today due to some news that came out over the past couple of days. First, an article came out saying that Palantir might lose its government contract to develop the pandemic tracking software since it was recommended to Biden's transition team to drop it due to inaccuracies. But then Palantir released a press release today saying that PG&E, California's largest power provider, is implementing Palantir software to help mitigate wildfire risks and reduce power outages. So we have some good news and some bad news. In light of the upcoming lockup period expiration, though, I am reiterating my buy-in price of $23 and my ideal buy-in price of $20. Next up is SENS. This is Senseonics. They're a pharmaceutical company. Over the weekend, Jack Spencer said not to buy this company. His reasoning was that the technicals were bad and that it makes a bad swing trade. But yesterday, Jack Spencer took a closer look at the company, and now he thinks this would be a good long-term hold. Ken and Grace also said this would make a good long-term hold, and to hold until after they get FDA approval. Richard Allen also said this would be a good long-term hold, as well as a good short-term play, and that this could go above $3 very soon. My financial friend also said he doubled his position today after the news that came out yesterday. So what was the news? Well, the company just announced a direct offering. Normally that would cause a share price to go down, but in this case that is actually a really good thing because as I mentioned when we first covered this company, they only had about 1 month of operating cash left. But now that they're doing a direct offering, that will give them enough cash to make it through the end of Q1. I also said that the technology was really good, even though the financials were bad. But if their share price keeps going up and they can continue to do direct offerings, then their financials should get shored up, and they should be able to bring their technology to market. The technology, by the way, is a small chip that your doctor implants in your arm. Then you can use your cell phone to monitor your blood sugar 24/7 without pricking. This could revolutionize how diabetes patients monitor their blood sugar, especially since this microchip can monitor your blood sugar 24/7 and automatically alert you if your blood sugar is getting too low or too high, without you even having to think about it or remember to test. We are still waiting for FDA approval on their 180-day chip, and that is expected to happen sometime sometime soon. And with all pharmaceutical stocks, once they get FDA approval, this stock could skyrocket. Just keep in mind that with any penny stock, this is a risky investment. Jack Spencer did reiterate that the technicals are still pointing towards a pullback, and that the stock offering coming up that could be a catalyst to cause a pullback. Next up is SPCE, Virgin Galactic. Jack Spencer thinks SPCE will drop back down this week or next week and retest the $26 support line. However, there are also a lot of catalysts coming up, so it might not get back down that low. In light of all of this, I am increasing our buy-in price and ideal buy-in prices to $28 and $26 respectively. Next up is SRNE. This is a pharmaceutical company. Informed Trades said this will be a good buy if it can remain above $9. He also said it could go to $12 in the short term, and there is a $30 long-term price target on SRNE. Next up is STPK. This ticker symbol will be changing to STEM soon. STEM is the first public company that is a pure play in smart energy storage. Specifically, they use AI to optimize energy storage by automatically switching between battery power, on-site generation such as solar, and grid power. This in turn can save corporations and governments millions of dollars in energy savings. I cover this stock extensively in the video I uploaded on January 11th, so make sure to watch that for more information on this company. Yesterday, Dead Inside gave us an update. Citron Research analyzed the stock and gave it a price target of $100, which is an almost 200% upside from today's closing price. Citron also said that smart energy storage will be a critical component of Biden's $2 trillion green plan, and because STEM is 10 years ahead of anybody else in this area, STPK is the best position to get government contracts and grow. Next up is TPGY. This is a SPAC, and they are merging with EVBox, which is a competitor to ChargePoint. The merger is expected to take place in Q1 of this year. EVBox actually has twice as many charging stations than ChargePoint in Europe. While they'll probably be number 3 in the United States behind ChargePoint and Blink, they look like they will remain number 1 in Europe. Richard Allen thinks this would be a great long-term hold. Like SPE, TPGY has already sold off from its all-time highs of $34, so it looks like a good buy at current prices. That said, Richard Allen did note that TPGY has resistance at $28, which is where it is now. Next up is TSLA, Tesla. This is an American EV manufacturer. Larry Jones says he's waiting for more pullback before buying more TSLA stock. StockMo said TSLA could reach $1,200 by year-end if everything goes right and Democrats provide tax credits for EVs. Next up is TTCF, Tattooed Chef. This is a plant-based foods company and a competitor to Beyond Meat. Jack Spencer said he's been watching the stock for a long time, waiting for the right time to buy. He wants to buy around $22.50, which he thinks TTCF could hit this week. That lines up with my ideal buy-in price of $23. I also have a buy-under price of $26, and Jack Spencer said that he would be comfortable buying TTCF at around $25.50. That said, StockMo said he bought TTCF today. He thinks TTCF will do very well since their financials are better than their competitors. Chris Sane has been buying TTCF as well and says anything under $25 is a buy. Ken and Grace also said now is a good time to buy TTCF, although he gave his ideal buy-in price at $22, which closely lines up with Jack Spencer. Next up is VGAC. This is a SPAC, and they have no merger target yet. This SPAC was founded by Sir Richard Branson, the owner of Virgin Galactic, ticker symbol SPCE. Tech Conversations has been scalping VG for the past 2 months. While they haven't announced a merger target yet, it makes sense that Sir Richard Branson will be bringing one of his private Virgin companies public. Speculation is that he will be bringing Virgin Orbit to market. Virgin Orbit is similar to Virgin Galactic, but instead of focusing on space tourism, Virgin Orbit focuses on sending small satellites to space. Virgin Orbit accomplishes this by launching a rocket from a jet aircraft, saving significant amounts of money. Of course, this merger is even more speculative than CCIV, but you might want to consider VGAC if you're looking to add another SPAC to your portfolio. Finally, we have XL. which is XL Fleet. This company converts gas cars into electric vehicles. From a commercial electric vehicle company standpoint, XL is far ahead of its competitors in terms of units sold, dwarfing its closest competitor, which is Workhorse, ticker symbol WKHS. ZipTrader has been waiting weeks for the stock to get back down to a recent price. Now that it's finally back below $20, it's finally near a good price. Although personally, I am maintaining my buy-under price of $16. I hope you enjoyed this video. Comment down below what your favorite stock pick is. And if you want to get some free stock, sign up for Webull through my link in the description below. Webull's going to give you 4 free stocks, and they're going to give me 1. That helps you out, and it also helps the channel out. And finally, remember to hit that like button and subscribe if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.